maybe the biggest problem we've had in this industry, which was quite simple. When this started, there was an announcement, and this was sort of in between, not in between, but between HUD, Fannie Mae, Freddie Mac, making an announcement that's saying, hey, people we know out there need help with this shutdown. We're going to allow people to take the next 3 months off from making their mortgage payment. And it will not affect their credit and blah, blah, blah. That one announcement is what sparked every single problem that we've dealt with since that time. Because it was a completely poorly thought out plan. It didn't really understand how mortgages work. Again, this is how Washington works sometimes, unfortunately, because you have someone who doesn't necessarily understand the finances of mortgages, and they think it's very, whatever, 1920s, where it's you got your big bank and they loan you your money, and the thought is, hey, the bank can deal without their 6% interest for 3 months. They'll be fine. It's not how it works. So how it really does work is you tell people that they can stop paying their mortgage, and the services that are servicing the mortgage, they have to make the payment. Someone has to make the payment. The payment can't not be made because they don't own the loan. The bondholders own the loan. So it has caused a real issue, because you have the lending world knowing that they have a large percentage of people that they are going to have to front the money for it, and maybe pay it outright. Will they ever get it back? And now you've got this issue where in any new loans that are written, the rule that's been announced is still in place. It still says that if you need help, if you need a break, you can take 3 months off from paying your mortgage. Now, let me start with the number one basic, and if people learn nothing else than this, then you're gonna be far better off. If you can afford to pay your mortgage, pay your mortgage. Not paying it, taking advantage of this quote unquote forbearance option, is going to hurt you. It is going to eliminate your ability to borrow money and to get a mortgage for potentially years to come. And so they say, oh, it doesn't report to credit, but it's true and not true. They may not report the late to credit, but they report the fact that the mortgage is in forbearance to credit. So it's the same difference, because it's the forbearance itself that makes banks look at your credit and say, hey, you're in forbearance, which means you're in trouble. The premise behind this, the entire premise behind being able to skip some payments wasn't opportunity. It wasn't, hey, everyone, take a little break, save a few dollars because everything else is going a little rough. It's meant for those who lost their job, who cannot afford to pay their mortgage, and they have no alternative. And if you have no alternative, all right, don't pay your mortgage. You've got to worry about your family first. That's the most important thing. But I would bet that 35-40% of all forbearances were opportunistic. People saying, hey, I hear I can avoid paying my mortgage. I'd love to take a break for 3 months. And a lot of those people are going to get hurt, and a lot of them don't know they're going to get hurt yet. They still think everything's fine. They skip their mortgage payment. They don't have any lates reported on their credit. At least that's the anticipation. And they think that everything's happy-go-lucky, but it's not. When they go for a loan, they are going to see the difference. They are going to see the fact that the banks are saying, no, we can't lend you money because you have a forbearance. And it's almost equivalent to having a foreclosure on your credit report, where there's a time frame, there's a waiting period. You need to be out of that for a couple of years before you can go ahead and get a new loan.